If you're looking to purchase a home in 2025, here are a few things that you may want to consider. One, know that the loan limits for traditional mainstream financing when it comes to home loans, those have increased. So right now for Fannie Mae or Freddie Mac, which is going to be the conventional home loan option, which allows for as low as a 3% down payment, that loan limit nationwide is $806,500. And that's going to be for what they call a one unit, kind of single unit. Now, here's what's really cool. Fannie and Freddie also have, which a lot of people don't talk about, but I love this idea, especially when we think about house hacking. FHFA has actually increased the loan limits for multi-family properties as well. So this could be a duplex, a triplex, or a fourplex. So here's how it looks. For a duplex, the nationwide conventional loan limit is $1,032,650. For a triplex, it is $1,248,150. And for a fourplex, it is $1,551,250. Now, why am I so excited about this? And what the heck does house hack mean? Here's what I see a lot. With interest rates where they are, and no big expectation that rates are going to drop, which I'm going to get to here in a second. But with where interest rates are, if you're an entry-level buyer and you're wanting to kind of get into the market, it could make sense to look at a duplex. So a duplex is a dwelling where there's actually two separate living quarters. You would occupy one as your primary residence and rent out the other, and that rental income on that other unit can help you offset your mortgage payment. That's what I mean by house hacking. You guys, this is a real thing, and we have so many buyers across the country that are employing this one strategy. So I'm excited to announce that the conventional loan limits are even higher than they were last year. Now, when we think about the other home loans that are out there, let's say for FHA, FHA has also increased their loan limits across the nation, but it's not a blanket number like it is with FHFA regarding conventional loans. FHA, the loan limit is actually driven by the county where the property would reside. And this is important because I see social media, and in fact, we've posted what the new base FHA conforming loan limits are for single family, 2-unit, 3-unit, 4-unit as well. But it's a little confusing and may not actually make sense based on the property area that you want to purchase in. So I'm sharing this with you because either one, you can reach out to us and we'll tell you based on that county what the FHA loan limit is, or two, I'm going to include the link that you can go direct to FHA and you can see what the loan limit is based on the county that you want to purchase a property in. So there's that. And then just remember with VA, there's no like set loan limit. I see all kinds of information out there. And you guys, yeah, I'm on social media. I'm seeing and hearing everything that you guys are seeing and hearing. And sometimes I'm like, oh, good Lord, what the heck? And other times I'm like, that's really good information. So I would just say, be careful of who you're listening to. And it's good that you are wanting to get educated. But when it comes to VA, here's the deal. Now, VA they're going to kind of follow that conventional loan limit. So that 806,500 for many lenders. Many lenders are going to follow that. But there are a lot of lenders out there that are going to increase that. And that becomes a VA jumbo loan. You guys, this is one of the best loan secrets in the country. And what it allows for with VA jumbo loans, like in our company, we allow for a VA jumbo loan up to $2 million. I literally just helped a client close a $1.9 million purchase. He did a no down payment. VA does not have mortgage insurance, and he had a service-connected disability, so he was not charged the VA funding fee. So this is an incredible option if you have served in the military, National Guard, or reserves. Okay, now, as we think and get back on track with what you should know if you're looking to buy a home in 2025. If you are self-employed and you are getting ready to file your tax returns, depending on when in the year that you're going to file the tax return and want to get pre-qualified to purchase a home, tax returns are going to be essential to your home loan pre-qualification. So be sure you are talking with your lender now. And if you don't have a lender, give us a call, because the strategy behind what your tax returns for the last 1 or 2 years have shown with regard to income versus whatever's happened in 2024 that you're going to be filing on your tax return is going to be very important to what you can qualify for. So timing, if you're self-employed and you're filing taxes, is hugely important and something to consider as you move into 2025. All right, where are rates headed? This is the question everybody asks. And I will tell you this. The media doesn't always get it right. Because as soon as the Fed drops the Fed funds rate, everybody's talking about mortgage rates dropping. And I'm here to tell you that the Federal Reserve does not control mortgage rates. The Federal Reserve's Fed funds rate impacts the short-term part of the yield curve. So 2-year, 5-year, but it's not impacting mortgage rates. Now, what the Fed says, consumer sentiment, investor sentiment, all of that is going to lead into what's happening with mortgage rates. But mortgage rates, really kind of look at the 10-year yield. That doesn't drive mortgage rates, but the trend on the 10-year is going to give you insight to what's happening in mortgage rates. So right now, and I see all the predictions, I see them all, the bottom line is inflation is a concern. It will continue to be a concern. Even with Trump. Trump doesn't drive mortgage rates. Inflation is going to impact mortgage rates, as is the stock market. And that's an interesting thing because people are like, stock market, how does that impact mortgage rates? It's all about supply and demand. If you have all of these investors out there and they have to park their money somewhere, they're going to buy bonds or they're going to get into the equity market and stock market. The stock market has been on a roar. So there's been a lot of money fueled over there. What goes up comes down. And so again, there may be a point in 2025 where the stock market starts to come down a little bit. And if that's the case, we could see some of that money come out of the equity market into the bond market. That could be good for mortgage rates. But honestly, inflation is the thing that impacts mortgage rates. It impacts investors buying bonds, which is what drives mortgage rates. Now, what do I think? You're like, just give me a number, Kelly. Right now, rates are mid-6s, high 6s. On average, changes every day throughout the day, lots of volatility. I've been singing that song for 2 years now. It's not going to change until 2025. I think rates are going to settle at the very low end, somewhere maybe in the high 5s. And that's a big maybe. I think realistically, we're probably going to be in the low to mid 6s. There's a chance if inflation actually increases that we might be back up into the low 7s. I'm not sharing this with you to scare you. I'm sharing this with you because I hear a lot of, when rates drop. Well, this may be the new normal. So if you are in a position where you want to sell a house, buy another house, or maybe you don't own and you want to buy a house and you can qualify and you can afford it and it makes sense, don't wait for rates to drop. If you own a house and rates do drop, you can look at refinancing. But this pent-up demand, and we see it all the time, I'm waiting for those rates to drop. Remember, the reason that interest rates were so low in 2020 and 21, and early 22, because our world, our country, this globe went through a pandemic. That led to those very, very low interest rates. The likelihood of that low of interest rate ever again, probably in my lifetime or your lifetime, is very, very low. So hopefully that helps you to kind of just gauge what to expect. And if you're waiting for rates to pause or actually lower, the reality is, I don't know that they're going to move much lower. And by that, I would say kind of sub 6, maybe high 5s. But again, that's a big maybe. Okay, let's get into housing prices. Oh boy. I was actually just watching an interview this morning as I was getting ready on this very topic because like you, I want to know what the predictions are. I want to hear what people are saying. And here's what I know. After lending almost 30 years in the residential real estate market, first of all, nobody knows. What we know is we can track appreciation year over year. So in 2024, the appreciation level, which is the price paid versus current market value, that increased roughly a little bit over 5%. So it's about mid-5s. I think it technically was 5.8, but let's just call it 5.5%. That means if you paid $300,000 for a house in January and you were looking at your current market value, your house might be $315,000. That's an easy way to kind of think about how appreciation works or what people mean when they say that. Now, there's a lot of conversation about market declines. And I want to share with you that that is a reality. And I know I'm a mortgage person. I see all the comments and I see everybody like, oh, you're a mortgage person. You're never going to tell people the truth. Well, here's the truth. Nobody really knows what's going to happen in the neighborhood you want to buy in or the neighborhood you own a house in. Because market value, again, goes back to supply and demand, which goes back to neighborhood. So when we all listen to the news, the median price range is increasing, is decreasing. It's not, it doesn't really mean much because it's national. If you're looking to buy in a particular city in that state, you want to know the specifics for that city and drill it down to that neighborhood. What's trending in that newborhood? Is that neighborhood appreciating? Are you seeing declines in the neighborhood? If it was a primarily entry-level neighborhood and maybe it was a newly built home community and maybe the buyer pool of that home community did minimum down payment and maybe, you know, we've had some job losses in an area. I mean, these things happen. Big companies go into these cities, big companies leave these cities, etc. So if that's the case, maybe in that particular neighborhood, the market value is steady or declining a tad. But in other areas, I will tell you, we still have competition in certain areas across the country. And so it's a difficult kind of one sentence response of what's going to happen to home prices. I think if you're looking to purchase a home, you want to partner with a seasoned real estate agent that understands the dynamics of the neighborhood you want to purchase in and drill down and ask the right questions and get the answers for that particular neighborhood. And that will tell you what you can expect. Now, right now I would call this market kind of a balanced market. So there's three types of real estate markets, residential real estate markets. We have a seller's market, which is really like there's a lot of demand and the sellers kind of control the narrative. Then we're going to have a buyer's market. So maybe there is more supply, if you will, than demand, and the buyers would control the narrative. Now, we're seeing a neutral market in many areas across the country. Again, not in all neighborhoods for the reasons I just explained, but we're seeing neutrality, which means, and this is the cool part, if you're looking to buy today, at least in Maricopa County, Arizona, I can tell you that we still see over 50% of the transactions that are closing in our market have some type of seller concession or seller credit towards the buyer's closing cost, which from a strategic lending perspective, we can use that money to help buy down the interest rate and bring affordability to the equation if that's what the buyer needs. And so this is a good time to be able to buy in that type of climate. And there's also price negotiations going on, you know. So again, that's one market, one area. We lend across the country. I lend in 45 states. So we have a buyer in Massachusetts right now. Not the same story in that particular city. And that goes back to this whole home price and this very kind of large blanket statement about what home prices are going to do. It's going to vary based on the area. All right. And then lastly, I just think if you are a first-time home buyer, I can't even imagine or remember the last time I've seen more really cool grant programs or down payment assistance programs or just some type of assistance to help either with a down payment or closing costs. It's an exciting time and there are a lot of different programs available across the country. Hopefully this was helpful to you. If you are wanting to purchase a home, I mean, just give us a call. We can set up a 15-minute chat. I've got an amazing team. Let's kind of walk through, ask you what your goals are. What are you thinking? Do some high-level conversation and get you set on a strategy that if 2025 is the year you want to buy a house, let's see if we can make that happen. Hopefully that helps.